Hey guys, Boris for BK Forex. Welcome to the Forex Weekly Technicals from March 6th to March 10th, 2017 for the euro dollar, dollar yen, and pound dollar. Can the buck break out? That's really going to be the question next week, as the dollar certainly showed some strength this week, but we're still very much at key resistance levels in the dollar that we're going to be watching very carefully. On the calendar this week, considerably more interesting data and from all angles. On the U.S. side, everything will be focused on jobs. Of course, we start with ADP on Wednesday. We already had a very good precursor to jobs with the ISM non-manufacturing, suggesting employment is definitely going up. Momentum in the economy seems to be pretty quite good. And the critical thing here, of course, is going to be two things. First of all, if 200,000 or more jobs come in, that's going to be a very bullish sign for a potential March rate hike. A truly bullish sign for the March rate hike would be if we match the expectation or even do better than that on average hourly. If average hourly goes to around 0.4%, that would really suggest that wages are finally starting to catch up with jobs, pretty much make a March rate hike a slam dunk, and very likely push dollar yen through the 115 resistance level that it's been trading at. Up to now, technically, what's been really happening, and we'll take a look at the charts right now, is the fact that despite all the positive data, the markets have yet to confirm a full dollar breakout on the yen side. On the ECB side, nothing much is expected on the presser. I think Draghi is basically going to maintain status quo on policy, maybe begin to talk a little bit about tapering, but as far as they're concerned, they couldn't be happier with what's going on. Growth in Europe is the best it's been in 5 years. Euro's at a low rate, which makes everything competitive. I don't think they want to rock the boat. I don't think Draghi is going to say anything controversial. So it's probably going to be one of the most non-eventful ECB pressers in a long time. Not much really going on there. Lastly, cable is going to be a very interesting story, because last week we tested this 122, we bounced off of it. The UK data is starting to show some clear signs of deterioration as inflation is going up, demand is going down. Annual budget increase will be a big look on Wednesday just to see where the spending priorities are and whether they're going to be stimulatory at all. But cable is going to be very much its own story as the week progresses. Let's take a look at the levels first, and then we'll take a look at the charts here. So on the level side, the euro now finding support at this 105. 107 is the new resistance here. Euro is trading quite well, actually. Dollar yen, still this 115 is the absolute Maginot line here. This is the critical resistance. And in fact, you really can't make an argument that there's a bullish dollar case until this 115 goes to the upside. For now, support certainly at 1150, certainly probably at around 1300. I've just made a wider range just to encompass all of the support that we've had over the last couple of months. And cable, this 122 is going to be very key. If we can't hold that again, in other words, if they test it and they break it, I think cable is going to be the weak link in the whole scheme of things here as we go into the next week. Let's take a look at the charts here, and you can see on the dailies how healthy the euro chart looks. We basically had a double bottom here at this 104. We've now tested the bottom at 105. Big breakout on Friday. Of course, the resist area here, this 106, seems to be pretty significant, but a breakthrough above the 107s really puts us on a path towards 108s. It's not at all inconceivable that we could have good U.S. data and strong support for U.S. rates, and yet the euro continues to go up, because the story in the euro is really all about the European elections. And as long as Marine Le Pen is kept at bay, I think a lot of the risk premium that was built into the euro based upon that is going to go out. So there's going to be a divergence between the economic data, which may still favor the U.S., and the political data, which is what's really driving euro through the highs over here. So I think euro is very much an interesting look here as we come up to these levels. If we can't clear here, then probably very likely a retest back out down to the 105s. But for now, I think euro looks to be like a buy to dip territory, especially after Friday's very nice breakout. Dollar yen is a little bit of a different story, because the dollar yen continues to be a failure. We still failed yesterday or Friday at the 115 level, and this is the fourth consecutive failure at the 115, and that is not a uber bullish sign for the market. Although the failure was definitely subdued here. This 114 held. Still, when you're looking at dollar yen, it's in a deep consolidative state. This 112.50 is the near-term support. The 11.50 is the very long-term support. But it's really going to be an watch on whether 115 can break, and then more importantly, can it hold? That's really going to be the question. If they take out 115 and it becomes a runaway train towards the 116, that's a very bullish signal, and you have a reasonable chance here to expect that we could maybe challenge the near-term swing highs. If we still continue to muddle on through here through this 115, if 115.50 isn't penetrated, it still remains a big question mark whether the dollar yen is a buy. I'm still reluctant to kind of buy it until the breakout happens. And pound dollar, of course, had this big test at the 122, bounced back. Pound is very tough to trade because it's one of those trades that rarely make immediate sense. There's two ways to look at it. Technically, you could say, well, we tested the 122s, and there's a very small amount of risk here, so it's interesting to take a contrary point of view and look for a bounce trade, perhaps the 23, 24s, which is quite possible here. On the other hand, if you think this is just a dead cat bounce, the proper level to sell here is either 124 on a retrace or a break of the 122s. A break of the 122s really opens up the potential here for a move towards the 120. It would suggest a much more negative market structure on cable. So right now, cable, in my opinion, is either a very short-term turn trade, or you have to wait for the on the long side, or you have to wait for the 24 to the short side or 22 break to the bottom on the short side before engaging with the pair. That's how the week shapes up. It should be quite interesting at very key levels. Quite a lot of event risk around it. So we'll see how the whole thing rotates. Wish you guys the best luck, the best trading. Boris Schlossberg, over and out.